So joining us now is Wells Fargo economist Shannon Grein. Shannon, we just heard Courtney talk about some of the robust nature of the data coming in for this Black Friday, maybe through Cyber Monday. What exactly is the data that you're seeing telling you about the health of the consumer and our propensity to spend?
Yeah, so I think we have a little bit more of a cautious take on the consumer this holiday season. So we are still looking for a decent pace of growth, so that just north of 3% figure that we're forecasting puts us just below the longer run average of holiday sales in the months of November and December. But if you look at momentum going into the holiday sales season, these categories of retailers have actually seen a pretty slow year-to-date sales growth through October. So I do think we're a bit more cautious in terms of the overall sales growth we expect this year, but we're still looking for a decent holiday sales season. So I don't want to dismiss the fact that holiday sales will still be strong. And to Courtney's point and how you've been uncovering it all morning, there are a lot of people going out there on Black Friday and having shopped yesterday. So I do think we have some decent momentum with this traditional kickoff being Black Friday.
Shannon, where do you think the interest is in spending, generally speaking, for the U.S. consumer? I understand that there are demographic nuances there, but we talked about this idea that goods was such a big thing for a while, then it transitioned to services. Are there certain parts of the market that are going to do better than others? What exactly do your checks show about what exactly we think we want to spend on versus things that we want to shy away from?
Yeah, so I think this year you're going to keep seeing a transition that we've seen in the past few years to experiences of gifting. So gifting theaters, movie tickets, restaurants, things of that nature that are a bit different than the traditional retail that you're obviously shopping at a brick and mortar or even potentially online. But we've really seen a normalization in spending. So if you look at shares of consumer spending in the United States that are dedicated towards goods versus services, we've seen a normalization now with the pandemic fully behind us. So households are spending more on goods now after that pull forward has kind of run its course. So I do expect a lot of the traditional gift giving will still be at play, though again, some of that service-oriented, experience-based gifting might continue to crop up this year. Now, the one thing that, again, you've been covering all morning is the discounting factor. So I do think households are a bit price fatigued in the current environment when, the necessities, food, gas, things like this are still pretty high in terms of price level. And I think households are experiencing a bit of inflation pressure and a bit of price fatigue when it comes to gift giving. So to the extent that there are discounts on key products and key goods, I think that will encourage shoppers this year and hopefully, from the retailer side, facilitate a larger basket overall if they are strategic with some of those discounts.